The eighth sum, you, a foreign exchange dealer of your bank, are informed that your bank has sold ATT on Copenhagen for Danish kroner 10 lakh at the rate of DK. 1 DK is equal to rupees 6.5150. Okay, so let us write this quote. 1 DK is equal to rupees 6.5150. Right, this is a direct DK quote in India. Okay, a direct DK quote because DK is in standard currency. Then you are given, you are required to cover the transaction either in London or in New York market. The rates on that date are as under. Okay, now what do you mean by covering a transaction? We've already discussed this above. This is your start of the solution. Cover is to protect, to hedge the transaction. Okay, so what is your original contract? See, you are a banker basically, and you have sold a TT on Copenhagen for DK 10 lakh at the rate of 1 DK is equal to 6.515. Okay, so I have sold DK. So my original contract would be, and there are two currencies involved here. If you see the quote right here, see, I'll highlight 1 DK is equal to rupees 6.5150. So basically I have my original contract. I'm as a banker is sold, or should I say sell, DK or buy rupee. It's the same thing because two currencies are involved in this quote. So what would be my opposite? In order to hedge, I do the opposite position, right? I enter into an opposite contract in the foreign exchange market in order to hedge a contract. So to cover, my position has to be sell rupee or buy dollar. Sorry, not dollar, DK. DK, the two currencies here are rupee and Danish kroner. Okay. Further, you are required to cover the transaction either in London or the New York market. The rates on that date are given to you. Mumbai to London, Mumbai and New York, London and Copenhagen, and New York and Copenhagen. These rates are given to you. These quotes rather are given to you. This is the bid and the ask quotes. Okay. Now, in which market will you cover the transaction, London or New York? And what will be the exchange profit and loss on the transaction? Ignore the brokerages. Which market will you cover? See, we'll see the London as well as the New York market, and we'll see where we get more profit. We'll hedge in that particular market, and the quotes are also given accordingly to us. See, Mumbai and London quote, that is one, London means pound and Mumbai is India, so it means rupee. Okay, 1 pound is equal to rupee 74.30 and rupee 74.32. So this is your ask and this is your bid. Okay, this is a direct pound quote. And also if you see another quote which is London and Copenhagen, so $1, not dollar, I'm sorry, pound. Okay, London is pound, London's currency. So 1 pound is equal to DKK 11.42 and 11.435. So again, bid and ask respectively. So this is also a direct pound quote. Okay. Similarly, they have given Mumbai and New York, that is India and US dollar, rupee and dollar. $1 is equal to rupee 49.25 and rupee 49.2625. And New York and Copenhagen, so it means dollar and DKK. So $1 is equal to DKK 7.567 and 7.5840, bid and ask. Okay, now if you see very clearly, I have not been given a quote which involves DKK and rupee directly. Okay, so here we have to use cross rates. Okay, let's do that. So now the most important thing is to select which rate we'll take, bid or ask, and whether we'll multiply or we'll divide. So that is, I think, the most important part of this question. So let's focus. First we take the London market and then New York. Okay, so for the London market we take these two quotes. These two quotes. Okay, let's start. Now see, what do you have? How do you start? What is in my pocket is, see in this question, sold TT on Copenhagen for DKK 10 lakh at the rate DKK 1 rupee is equal to, 1 DKK is equal to rupee 6.5150. It means I'm selling DKK and I'm buying rupee. See, I've written this, the original contract, sell DKK and buy rupee. Okay, and buy rather or, the word should be or, because when you are selling, what you get in return is the rupee. You're selling DKK, you get the rupee. It's in one quote, there are only two currencies involved. Okay, so how much, by selling DKK, how much rupee am I getting? What is in my pocket right now is the starting point of the solution in order to select the rate. Okay, so for that, what is in my pocket? So I am selling DKK. How much it was? 10 lakh. 10 lakhs at the rate 1 DKK is equal to rupee. How much? 6.5150. 6.5150. So therefore I get rupee 65,15,000. Okay, this is rupee. So now in order to cover this rupee 65,15,000, we have to sell this rupee or buy DKK. Okay, that is the cover transaction. See, we've already done this. If you want, I'll use a different highlighter. In order to cover means nothing but hedge, protect the your foreign exchange exposure. Okay, so I'll sell rupee or buy DKK, it's the same thing. Now I have rupee in my pocket. Okay, we sold DKK and we bought rupee. That is what the banker is doing, that's given in the question. So now finally I have rupee 65,15,000. Okay, so to cover the transaction, I will have to sell this rupee. First we'll do in the London market. So how do we do this? Direct quotes, that is rupee is not quoted against DKK, so we have to use the cross rates. Okay, so I have summarized the rates here from the question itself. This is basically the question rates. In the London market, if you see, 1 pound is equal to rupee 74.3 and 74.32, and 1 pound is equal to DKK 11.42 or 11.4350. The ask and the bids are given. Now how do you select from these rates? So you start from rupee, what is in your pocket, and you are selling rupee. Now in these two quotes, where do you find rupee? This one, this right here, you find rupee, right? I want to sell rupee, but if you look very closely, the quote given to you is a direct pound quote. Okay, so what I do is I want to sell rupee in order to cover the or hedge the transaction, or I could say buy pound. Why am I doing this? Because the quote given to me in question is a direct pound quote. Okay, it's the same thing, either I sell rupee or I buy pound. Okay, please remember, in a quote there are only two currencies. So in this particular quote, it's pound and rupee. It's a direct pound quote. So if I sell rupee, it means that I'm buying pounds. Okay, so buy pound. Okay, now buy at a higher or lower price. A customer will always buy at high price, right? So the quote here would be 74.3 or 74.32. This one. Okay, this one. We have selected this quote. That is from ask and bid part is complete of one quote at least. Next we move. Now I have bought pounds. Okay, now I have pounds. Now do I actually need pounds? No. So I will sell these pounds and get DKK. Okay, so for that I have the second quote. If you see, 1 pound is equal to DKK 11.42 or 11.4350. Now which quote do you select, bid or ask? Now listen carefully. I have pounds now. See, because I had rupees initially, I sold rupee because that was the cover transaction, selling rupee. It means buying pound because I had a direct pound quote with me. So I bought pound, now I have pounds with me. Okay, these pounds, now I have to sell these pounds because at the end I want DKK. Okay, see, we did not have to do and go through all these pain of the cross rates if we had initially the DKK and the rupee quote itself. We do not have that, so we start from rupee and we go to DKK. Okay, so I have pounds with me. I'll sell those pounds and get the DKK. Now which rate should I select? This is also a direct pound quote, and I have to sell these pounds. Okay, so sell pound and a direct pound quote. So it's easier for me. Now sell at what, high or low? A customer will always sell at a lower price. Okay, so 42 or 4350, this one. Alright, now both these quotes are selected. Once again, just for the flow, last time I'm writing this, see, Initially you had DKK 10 lakh in the question, you are selling it at 6.5150, 1 DKK is equal to rupee 6.5150, so then you have rupee. Okay, so basically sell DKK or buy rupee. Okay, now you have rupee. From this, in order to hedge this transaction, you had to sell rupee. Okay, but you did not have a direct rupee quote, but you had a quote containing rupee and pound, but a direct pound quote. So sell rupee means you said, okay, buy pound. That is nothing but buy pound. After I bought pound, I actually don't need the pounds. I need DKK. So I have one more quote involving the pound and DKK. So I have no use of these pounds. So I will basically sell these pounds. So sell the pound, and finally I reach my destination is buy DKK. Okay. Now this was the flow for your understanding purpose. We have already selected these rates, these two rates. Now what do? We multiply or divide. That is the question. There are only two possible scenarios. Okay, two possible permutation or combination, multiply or divide. Now what do you have? What is your foreign exchange exposure currency? Let's see in the question. See, Danish krona, sorry, 10 lakh. Okay, that is DKK. DKK is your foreign exchange currency, foreign exposure. All right, so I have DKK 10 lakh. Now with the rates that we've selected, let's go back to them again. In both of these rates, this is the first one, first code, the second code. Where do you find DKK? See, 1 pound is equal to rupee and 1 pound is equal to DKK. This second code, and we have already selected the code. So these codes are the non-selected, are not important for us. Forget it. Okay. So we have 1 pound is equal to DKK 11.42. But again, unfortunately, it's a direct pound code. Okay, and our exposure is in DKK. So we have to divide. See, only if you divide, the DKK will cancel out and we are left with equivalent pound, correct? So 11.42 is it? So this is divided by DKK by pound, 11.42. Then now if you do this, I have equivalent pound. Okay, and I will sell these pounds. So in order for that, I need the code 74.32. This is my code, and fortunately for us, we have a direct pound code. Okay, and our equivalent amount was also pounds. See right here, this DKK will cancel out and you get we'll do this here. See, 10 lakh divided by 11.42 would give me 87.565.67. Okay, we are not doing the round off and all that. So basically this is my equivalent pound. Okay, pound currencies are extremely important in forex. Then here a direct pound quote, and the exposure is also now a pound. So what do? Multiply or divide? Multiply, because only if I multiply, let me see the rate, 74.32. so this is into rupee upon pound, 74.32. Pound cancels out. Finally I'll be left with rupee equivalent. Let's see what it comes to. Multiply this by 74.32. This comes to 65 lakh 7,880.91. Okay, so this is the rupee cost to buy DKK, right? Rupee 65 lakh 7,880 or 881. Okay, so this is, I'll write this here. Therefore rupee cost to buy DKK. To buy DKK, this was basically the hedge position. If you see, if you check the flow of the solution, you'll get the answer there. Rupee cost to buy DKK is rupee 65 lakh 7,881. I'm rounding this off. Okay, now what was the, when you sold DKK, how much rupee did you get initially? See the rate that was given in the question. where we sold a TT, remember, a TT DKK at 1 DKK is equal to 6.5150, I think was the quote. So it was rupees 65,15,000, correct? This one. So this is, you sold DKK at rupees 65,15,000 and you are buying DKK to cover that position, that is the hedge position, at 65,07,881. So obviously I am selling at high and I am buying at low, so therefore it's a clear profit. Profit is equal to how much? The difference of this minus, say, 65,15,000 minus 7,881 gives me 7,119. What? Rupee. Okay, this is profit. Now this profit has to be compared with your New York market as well. New York market, again you do the same thing, that is the cross rates, and you find out the profit and you compare these profit. The place where you get higher profit, either New York or London, you take that. That is basically you hedge the contract, you hedge your DKK 10 lakh there. Okay. So for the New York market, I'll not speak in so much detail, we'll solve quickly. Okay. Now see here, for New York market hedging, initially I had 10 lakh Danish krona which the banker sold, okay, for rupees, I think 1 DKK is equal to rupee 6.5150 was the quote. So basically now I have rupee, the banker has rupee, how much? The rupee was 65,15,000, correct? In order to cover, I have to sell the rupee, okay, but a direct rupee quote is not given, rupee is quoted against dollar, so a direct dollar quote is given to me. So sell rupee means buy dollar, so buy high, so the rate that I'll be selecting would be 2625, this one. So let me just highlight this rate, and this particular rate is not of any importance to me, right? Next, buy dollar means now I have dollars in my pocket. Do I actually need the dollars? Not really. I need DKK, Danish krona, okay? So I will sell these dollar in the market and buy DKK. Fortunately for me, I have a direct dollar quote. See, dollar is quoted in the standard currency. So what I'll do is, I have to sell these dollars and buy DKK. Okay, so sell dollar or buy DKK. Fortunately for me, we have a direct dollar quote, and sell at high or low? Always at low. A customer will always sell at low. So the lower of these two are this one. So again I'll highlight this, and this one is of not any importance to us, correct? We have our both the quotes, and forget about the other quote that are there, just cancel it out. Now what do we do? Divide or multiply. For that we see the exposure. The initial exposure in the question given to us was DKK 10 lakh. Write it down. Okay, now if you see the quotes, DKK, in both these quotes, where do you find DKK? This one, the second quote, okay, but unfortunately DKK is quoted against dollar, it's a direct dollar quote, so we have to divide this 7.5670, okay. So this is basically DKK by dollar 7.5670, so DKK will cancel out, okay. Now next thing, now you are left with dollars, DKK cancels out, so the other quote we see, which is $1 is equal to rupee 49.2625, and our exposure right now will also be in dollar, see equivalent dollar amount the moment we'll calculate this. So, and the quote is also a direct dollar quote, so we have to multiply 49.2625, multiply this equivalent dollar to rupee by dollar 49.2625, okay. So dollar cancels out, you are left with equivalent rupee amount. Let us calculate this. 10 lakh divided by 7.5670, multiply this whole thing, or rather this calculator, multiply this with 49.2625. This gives you 65 lakh 10,175.76. So I could say 176. Okay, I'm rounding this off. Rupee. Very important, the currency rupee. 65 lakh 10,176. Final answer. So this is basically, you are buying DKK. Okay, so this is the rupee amount required to buy DKK. Okay, to buy DKK, to buy. Okay, to buy. And the initially, what this is the hedge, the cover position. Initially, to sell DKK, how much rupees we sold DKK for? See the initial question, this one. Sold DKK 10 lakh at the rate 1 DKK is 6.5150. We've already done this. So this is rupees 65 lakh 15,000. Correct. Now we have bought at a lower amount, 65 lakh 10,176, and we are selling it at 65 lakh 15,000. So obviously it's a profit. The question is how much? Minus 65 15, 4,824. This is also in rupees. Okay, now what we have to do is, we have the profit amount. If we hedge in the New York market in United States, this is the profit amount. And if we hedge in the London market, see the profit was this much, 7,119. So obviously we can see that we should hedge in the London market because it's more profitable. Therefore, hedge in the London market as the profit is more, and just get the difference. So here only we'll do minus C, minus 7,119. This is nothing but 2294.76, 2295 you can say. So this for this extra profit, we'll hedge in the London market. Okay, we'll hedge the DKK 10 lakh in the London market. Correct.